Getting there, that's.
I'm just getting ready to gavel a peanut gallery.
Never heard of it. I'm not positive. I think it's pretty close.
It's up there.
I think it's pretty close.
26 letters plus A to M again.
Yes. Well, I'm just trying to make the meeting as short as possible. I can stick on the consent agenda, but here it is. Until you guys pull it all out and then you extend it.
It didn't used to be that way.
Yes, I know. I've heard stories where council meetings go till 2 a.m.
Yeah.
Is there beer involved or something? No. I was thinking this to tell me these stories. No. I don't know if they did.
Yeah, we're just staying in your hotel for sure.
You
can crash at my house.
might have been passing a flask or something.
Yeah.
All right, 6 o'clock, I'll call the meeting to order. You can all please rise for the pledge of allegiance.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Christina, you have the roll.
Yes, I have everybody. Hopefully everyone else, then I should be good.
Right. Then I would look for a motion for the approved this evening's agenda, please.
Motion for approve this evening's agenda.
I'll second that.
We have a motion and a second. Any discussion? All in favor? Aye.
Aye.
Opposed? Hearing none, motion carries. Consent agenda. All items on the consent agenda will be passed with one council motion unless there is something we need to remove for further discussion. Anything to remove? Thank you.
Motion to approve consent agenda.
I'll second.
Okay. Motion and a second. Any discussion? All those in favor?
Aye.
Aye. Opposed? Hearing none. Consent agenda is approved. For on.
You guys can start, Charles. I'll just do a presentation in just a hot minute.
That's fine.
Roy Gator.
Yes, and Sienna Kelly. So last year I presented along with Chris Knopik. He is, since I'm now the principal or senior audit, he's getting older and needs a little assistance with all the work that he has. So Sienna is essentially kind of still running the audit. And then I've just gotten more involved, probably than I was last year, partially because of I had the health episode last spring. So, but yeah, very happy to present your audit for you this year. And maybe I'll let Sienna introduce herself and then I will go through, some of the key communications here.
I'm Sienna Kelly. I've been with CLA almost 5 years now, worked exclusively with state and local government, and it's always good to be here. Nice to see you all in person.
Sure does. All right. So just a quick agenda here. I'll go through the required communications. I'll provide the audit results, which includes our audit recommendations. Sienna will walk us through a bunch of the different financial results and trends that we're seeing for the city. And then I will end with some emerging issues and talk about some of the upcoming governmental accounting standards. And then at the end, I want to walk the city through different reporting options that you potentially have. All right, so starting off, just required communications. Audits provide reasonable assurance, not absolute assurance, so we don't test every dollar that runs through the city. The city the size, we do test a lot of them, but we don't test every single transaction. What that means is the financial statements are materially correct, and in general, you can rely on them to make decisions. But if you had a $5 payment for, stamps or something going out, we wouldn't have necessarily looked at every transaction. No audit typically does that. That's not feasible financially or from a time perspective. Significant accounting estimates. We didn't have any significant estimates that we thought were affecting the financial statements that we thought were particularly sensitive. You do have a host of different estimates that affect your financial statements, from pensions to depreciation. So it's not that none of them are in there. There just aren't a lot where you, as a city, are making determinations that would significantly change their value. Accounting policies, the new accounting standard that was implemented this year did not have a significant effect on your financial statements because it's disclosure based. So there's a host of other things that we were required to basically look for to say, hey, if this happened, we need to disclose the risk. And if that were to be the case, you'd have another paragraph or two. So that was just a new accounting standard that was implemented this year. And then we did get the full cooperation from management. So Christina's been very helpful to work with. You guys, for a smaller city, you guys are great to work with as like an audit client. It had worked, I think, pretty well having us come up.
Was a lot better.
So I think the field work portion went significantly smoother. Plus year 2 is always a lot easier. So audit results, you did get an unmodified or clean opinion on the financial statements. So that's the best opinion that we can provide. And that means every balance or transaction that we went to test, there was proper support for, and we were able to understand, why it was in that class of transactions, what transpired, and kind of how the controls and approval looked around that. For internal controls over financial reporting, this is where we'll go through some of the audit recommendations we have. Some of these are things that the city can remedy. Some of these are probably inherent to the city size. I know that's small. I'll go through them all. So that first one is segregation of duties. A city with a few employees like this, you'll typically always have segregation of duties. The board would have to get pretty involved to avoid something like that. And so you normally will see that at a smaller city because one person can't just do everything and the other person approve. And even if it's set up like that, typically just so you have redundancy, both people have to have access to do it. And if somebody has access to do a full transaction cycle, which you typically need, then we have a segregation of duties risk. That doesn't mean that we saw anything going on that we wouldn't have expected. It doesn't mean that nothing incorrect happened during the year. But we're just disclosing that there is a risk that somebody has access to a full transaction cycle, and that's normal for a city this size. Audit adjustments, there was some items of bond issuance costs, local option sales tax, and capital asset additions. Bond issuance costs is a little strange. What that one comes down to is when the city issues debt, you receive a portion of that in cash, and there's a portion that essentially kind of goes to pay like the issuance fees. The portion that you don't see in cash, that just goes directly to pay off some of the issuance costs, but as part of your debt, that was the portion that wasn't recorded that was added. That's a common error that we see because this cash never passes through the city, but governmental accounting requires that you book the entire amount. For the local option sales tax, the report that flows through on, and we've given this basically back to the state, when they, or like the counties, when they basically are providing you with the reports for some of that stuff, it's not always clear how many months should be included in the receivable. We worked through that and we basically created a cheat sheet. So for next year, it'll be a little bit easier. Any city that we have add local option sales tax typically will have that the first year because it says revenue for this year. And you have to it'll say revenue for January. And really that's supposed to still be included because it was collected in December. And then it's revenue for January is the receipt, and then you don't get it till February. I know that's a lot, but basically it's kind of convoluted and it's hard to follow. So now we have a way to do that and avoid that in the future. Capital assets additions. There was just a couple items that qualified for capital assets that we identified through the audit process. It doesn't really change any of your actual expenditures or outlays of cash. It just means there's something that we had to capitalize and then depreciate on the government-wide statements. Missing supporting documentation for employee census data. This is another common one, and it's because of the retention policies. So essentially, when you have employee census data for a fire relief association, right, you have the firefighters that are basically part of the pension. And then every 2 years, they get a new actuarial report. So they didn't have this last year because we only have to test it every other year. And they provide the data to them. And in so doing, then we test that data because that data is what the actuary is using to make their liability calculation that the city then books into their records. Oftentimes fire reliefs may not be the best at record keeping, but B, you have to keep records for people that have retired. And so a lot of times you'll see a record retention of 7 years because that's in line with state statute. So people will get rid of some of the things like separation date, hire date, maybe length of service, even though those are things that are going to the actuary, so that we have to test them. And if there's any of that missing, then we basically call that out and say, hey, you should keep that support just in case you ever thought it was wrong, so you can make sure it's accurate, so you get the good right liability. So that one, if you do have people that are retired, you could essentially, and they're still kind of in there, they could basically have them sign a form that just kind of lists some of those key pieces, and then you have something kind of supporting what's going to the actuary. And we kind of worked through that as an option as well with the city. And then oversight of the financial reporting process. That is not to say it's in more detail in the letter. Christina does a nice job overseeing the financial reporting process. What that's getting at is that we draft a very complex report. And if I miss a technical disclosure, it is possible that through the review of the city, it would get missed and they wouldn't know I excluded it. So there is a risk because, and that's typical of a lot of small entities we work with, that if I were to miss a technical aspect, like something for that GAB 102 that just got implemented, that somebody might not catch that error. So that's kind of the risk we're disclosing, probably also one that would be hard to eliminate. But I do think the audit adjustments and missing support are things that are certainly could be remediated. And then from Minnesota legal compliance, there was one item where we were looking for quotes and it wasn't kept on file to show that there was a quote for something that ended up being between 25,000 and 175,000. That's just a state statute. Can happen from time to time. Sometimes it's because quotes weren't obtained. Sometimes it's because they weren't kept on file, but essentially there weren't multiple quotes for us to review for that project. And then for the single audits, we did do 2 years of single audits. And so essentially you have that USDA loan and you basically have 2 bonds that they hold. And even though you spend no money related to them, if you have over $1 million outstanding, it requires us to do a single audit over it. And so we did that for 2024 and 2025. We didn't have the things that we noticed, kind of the reporting requirements. Everything was getting submitted timely. Everything the city was supposed to do in relation to that loans and those funds was done properly. The item that we noticed was, and it's mostly, again, because you have a small staff, Christina prepares the report that is due for this loan, and then nobody's reviewing it. And that creates a risk that she might make an error and it would go unnoticed. There wasn't an error in the report, but for single audit guidelines, they take away a lot of our ability. They basically just say exactly what you have to report. So if there's anything you have to do and there's not a direct control to catch an error, then we have to report it. And that's just how the federal guidelines work. So the report was correct. It was filed on time. There just has to be a level of review added to that each year when that's filed to basically remedy that one. All right. And then any questions on any of that stuff? Otherwise, I'll let Sienna get into some of the.
Do we have any knowledge of what specific contract was the violation? 5,000 bids.
Oh, the one item that we didn't get multiple quotes on. I honestly can't remember what it was.
Sure.
It's been 9 months.
I'll send. How about after on my way back or after I'm done with this, maybe while I'm still here. I can actually probably look that up while.
I'm guessing it was fire department related. Ron, that's the only thing that comes to mind, and that has happened more than once, especially with the truck from 24.
I'm just curious.
Is the fire relief the only one we have to keep employee records for?
Census data.
Yeah.
It's the only one you had an error with.
Yeah.
And when
Fair.
yeah. So no, but is the one that we had something that was missing for. And if you were going to have census data missing, having it be for a fire leave, like that's super common. That happens a lot, especially if you have on call and you buy your volunteers and stuff, because the chance of somebody just kind of getting into it and doing some things, then getting reported for the pension, but maybe not filling out all the paperwork is kind of, but the retention piece doesn't help. So.
It also doesn't help that the fire relief themselves, they have boards for each of their entities or their buckets of money, but the fire relief does most of their reporting themselves. They have an outside independent auditor that does their audit, but it doesn't do this section of it at all.
So what's weird about fire reliefs is they have the pension, right? But ultimately, if that dissolves, the city is potentially on the hook to pay it.
Correct.
And so the fire relief doesn't book the liability, you guys do as a city. And because it's on your books, the census data matters for your audit and not for theirs.
Right.
So they'll get it audited and their auditors won't look at it because they don't record anything for it. And then the city, who's not maybe the entity doing all that record keeping and retention and collection, is then getting it tested because it's on the liability in your books. But I'd be happy to connect with any firefighter that's interested in the proper record keeping.
They'll just give it to me anyway.
Yeah.
So I don't know.
We'll make sure that we pass that along.
Yeah, I don't know how you say that. Yeah, that's right. So if you want to go on the graphs, I'll look up that bid law item.
Good.
Thanks. Oh, by the way,
Thank you.
there we go.
So I get to talk about some of these fun graphs, breaking down a little bit. So first one we have here is the general fund unassigned fund balance as a percentage of expenditures. So we bring this up just because it is a good rule of thumb to have a healthy fund balance as compared to expenditures, and the state auditor guidelines for unrestricted fund balance, which would be unassigned plus committed and assigned. That guideline is about 35 to 50%, and the city's policy is to have at least 35%. So we can tell from this graph here that that light blue line is actually about 41% for assigned fund balance. And then if we talk about unrestricted, adding in that there's a balance for assigned fund balance in the general fund, that brings us to about 44%. So that is in line with the city's policy as well as the state auditor guidance on that as well. The one thing to note here is that although fund balance is increasing, you can tell that the percentage of expenditures is decreasing a bit this year. And that really has to do with a large increase in expenditures as it relates to some of the accounting for the DMV and DNR remittances, which I'll go into a bit more detail with on the next slide, but that's the main driver of the decrease, is really just kind of a change in the accounting.
And ultimately, that's a very healthy fund balance to have, right? And it's in line with the recommendation. That lets the city, right, where you can say, hey, we're in line with what we're being recommended to have. We still have a cushion to make sure that, hey, we get to determine what and if we ever want to issue debt, if we have unforeseen circumstances or expenses. And I think is something to definitely try to strive. Of course, that meets your own policy, but that's something that not all cities are able to do. But I think the smaller the community, the more important that is, because of how much more of an effect unforeseen debt can have.
Yeah, and you can see the increase in the unassigned fund balance over time. So with those DMV and DNR payments, so what happens is the city will collect payments from citizens for anything related to DMV, DNR, and then a portion of that the city keeps and a portion is remitted to the state. So in the past, the only portion that was recorded as revenue was the city's portion, and then the portion due to the state recorded as a liability with no expenditures booked. But this year, the proper way to do that is actually gross those out. So the payments being remitted to the state actually should be a revenue and expenditure. So when we look at these graphs of just revenues and just expenditures, you'll see a large jump in this case, in the charges for services. We can see that orange bar dramatically increase, but once I move on to the expenditure slide, we'll see a large jump in expenditures as well. But the main thing to note is they do net to zero, so there's no fund balance effect. Are there any questions on that? kind of a new item this year. So just a change in how we're doing the accounting. Other than that, though, for revenues, most types of revenue are pretty consistent past 5 years. And like I mentioned, in the general government expenditures, see that large jump, is about $767,000 of those remittances to the state on both the revenue and expenditure side. The other item I wanted to touch on here is just capital outlay has been decreasing just a little bit. Last year there was a city hall feasibility study that led to some increased costs just due to that, but there wasn't anything quite like that in 25. So there's still capital outlay in some other funds, just not as much in the general fund this year. Right, next we have the golf fund, and not too much changes year over year. Expenditures did exceed revenues this year, but fund balance did kind of go from less of a deficit this year, and that's pretty much due to a transfer in from the liquor fund, kind of helping out the golf fund. Okay, this is the revolving loan fund. Revenues, expenditures, and fund balance pretty consistent for the past 5 years. The cash balance has been increasing, and that's due to some of those loans being repaid to the city. Cash is increasing, and then the receivable balance is decreasing over time as these loan payments are made. There's less of a receivable on books. All right, for the fire department special equipment fund, revenues fairly consistent year over year. The largest change for 25 is total fund balance, and expenditures almost flipped. You can tell those colors there, and that is because capital outlay largely increased purchase of the McQueen fire truck in 25, at least the prepaid portion of that. So that's on the books on the government-wide statements as construction in progress. It wasn't quite ready in 25, but that's why we see that flip-flop of those two there.
And when you're looking at kind of like a equipment or capital project fund, that is how you would want it to function. Ideally, right? It's where you're building up the resources to then make the purchase, right? And that allowed you to finance, right? How much less in money for a truck like that. And so while that is a stark change, and some people look at that and like, oh no, is the fund in danger? No, because you guys get to choose and budget and decide when you're making those purchases. And so I think that that is a very healthy way for a capital projects fund to function.
All right, so next up are the enterprise funds. That is going to be water, sewer, and our liquor fund. This is this is operating income and loss, which includes depreciation and operating activity. So some of the losses on here don't necessarily mean there's cash flow issues, just kind of shows whether operations are covering their costs on a full accrual basis. So the liquor store, which is going to be that green line, actually went from a loss in 24 to showing an income in 25. Part of that reason is in 24, we had some additional expenses due to a change in the OPEB, other post-employment benefit estimate, which caused a jump in expenses and personnel costs to kind of just true that up. So that's part of the reason why there's kind of a up and down there. But we do see an income this year. For the sewer fund, there was a loss in 25, but a bit less than we saw last year, mainly just due to expenses being larger than revenues. And then same thing in the water fund, decreased a little bit just due to revenues not quite covering the expenses for the year. Just something to note with these enterprise funds, if we do start to see losses consistently year over year or increase in these losses, we just recommend maybe reevaluating some of the fee structures. Might be time for an increase if we keep seeing this consistently year over year. This next graph here is Again, showing operating income and loss, but this is just taking depreciation or amortization out of the equation. So liquor store, no real changes there. Sewer fund also still showing a loss. The main item I wanted to point out here is the water fund is actually showing income here once we take out depreciation, because there is a 2010 water project that has a large depreciation expense each year, and taking that out of the equation actually creates income for the water fund.
And even though that backs out depreciation and amortization, there is of course still some items from liabilities that roll through those expenses. So that's not really necessarily the true cash change that you have. The cash flows will show that. But of course, that lower sewer fund, I'd say this is the one to focus on to say, hey, do we have to reevaluate? But if you're covering your costs after back out depreciation and amortization, you'd basically be saving money every month or every year. So just something to keep in mind, but always you gotta obviously have constituents and people don't like when you raise fees, so we understand you have pressure on both ends. But sometimes looking at those, if you see that continue with the sewer fund, might be something to look at.
All right, and this graph here is showing the unrestricted net position, so kind of the spendable portion of net position for these enterprise funds. Liquor fund, not much changed from last year. It's at a bit of a deficit. The sewer fund actually increased a little bit, partially due to some transfers in from the debt service fund covering some of those expenses. And then the water fund didn't have any of those transfers in from the debt service fund, so decreased a little bit in the net position there. Next, we're gonna get a bit of a closer look at each of these three funds. So this is the water fund. The lighter blue bar on these graphs is the expense side, and then the dark blue is the revenues. So you can see expenses exceeded revenues, which is causing this operating loss. And then, like I mentioned before, that red line is income before depreciation. Once we take depreciation out of the equation, we're showing income here. The sewer fund, we also have more expenses than revenues, which is causing that operating loss with or without depreciation. And then the liquor store fund, gross profit exceeded expenses for the year, so that is contributing to that income this year. And yeah, so that generated income with or without depreciation. Either way, we're showing income. And then one item I really wanted to highlight with the liquor store is that even though we are showing an income, there's still a deficit net position. And we look at the financial statement, we'll have revenues and expenses, and that will be the income, revenues less expenses, and then we have transfers in and out. And the liquor store actually helps a lot of these other funds out by transferring money from the liquor store to the general fund, the golf fund, and non-major governmental funds, which is the cemetery fund is in that larger group of non-major funds. So that's really where that money is going. In this year, it was about $78,500 was transferred out of the liquor store.
Right, so while on the previous graphs, the liquor store looks like it kind of cuts even. The reason is because it is supplying money to the rest of the city to offset the tax burden, and the other ways that you might get money otherwise. All right, these transfers essentially are basically showing, if somebody else owned the liquor store, what they might take home, and instead the city is getting back for its operations. So this is a very healthily running liquor store that's providing a lot of benefit to the community from a financial perspective. So I mean this is basically showing the benefit of having that, right, for the cities that choose to do that.
Next, we have cash and investment balances by fund type. So main takeaway here is that cash did decrease overall a bit for 25, and mainly due to a large purchase, about $1 million of that McQueen fire truck, major expenditure for the year. And we can, so that a lot of that is coming out of the fire department special equipment fund, which is that light blue portion, and we can see a large decrease from 24 to 25. General fund, which is the green area, increased a bit just due to less capital outlay expenditures as compared to the prior year. And then the capital projects fund, which is the dark blue, increased a bit due to some of the debt issuances for the year. And then last slide I have for you all is budget to actual. So the general fund, both expenditures and revenues were over budget. Water fund depreciation and expenses were over budget, but revenues were under budget. Sewer expenses were over budget, revenues and depreciation were under budget. And then for the liquor store, expenses and revenues were over budget and in budget for depreciation. So
And I did look up too, which contract that was. It was the Gustafson Home Improvements Interior Renovations contract.
Oh,
It was for a
that
total.
was for the library.
Yes.
That was a library contract.
Thank you.
All right. Any questions on any of that, those items? Great. So I'll just cover this briefly. This is the upcoming governmental accounting standards that are essentially going to impact the city next year for 2026's audit, and then the following year for 105 for 2027. So statement 103. What that is changing is it's essentially going to update what you're allowed to put in your management discussion and analysis. It's kind of like the first quarter of the report. And so it has a lot of different numbers and some graphs and things there. And it just basically is telling us what we need to put there. So there might be a couple extra paragraphs. So it'll be a little bit more policy driven instead of just talking about year-over-year changes. The other piece that'll change that'll impact the city more so is going to be for the enterprise funds. It's going to add a section to the report that's called, it's basically it talks about subsidies. It's not that you're going to report anything different there, but transfers in and out will become subsidies. So for like the liquor fund, instead of being below in other financing sources and uses, they'll be in the subsidies area to show that they are then going out and subsidizing other basically governmental items. So they're trying to just classify things more standardized across enterprise funds. And then they have also redefined what operating and non-operating revenues are. And so it is possible if you ever have a grant or anything that were to go into the liquor store or one of your other enterprise funds, that might end up in a different place than it did in the past. But given you're so user fee oriented, that won't change much of what you see for charges for services.
If I understand that correctly, then it'll actually be a little bit more plain English understanding when you're reading the financial statement because of 103 and 104 then.
Yep, and it'll bring it, it'll make it more clearly as part of like the income loss statements as versus like being way below on the bottom. Because enterprise funds, a lot of the reason you have them is to hopefully to offset other things. So it's calling that out differently. Okay.
Yeah.
And if you have any intergovernmental revenue, where you get a grant in that helps keep the fees for those services lower, for the users of the enterprise funds, that will also be included in there. So I don't think you'd expect a ton there, but you might see that from time to time. If you do like something with facilities or a building that one of those is impacted by. So that's the biggest change for next year, I would say. The other changes in there are if you were to have an ACFR or the annual comprehensive financial report, which a city this size I don't necessarily think is necessary. Then for statement 104, disclosure of certain capital assets. That's essentially making us split out your fixed assets and your footnotes in a specific manner. It's already meeting that criteria. But also if you ever list anything for sale, so say the fire truck that you have capitalized, if one day, I don't know, 30 years, if you list that for sale, we would have to disclose, hey, they have a capital asset, it's listed for sale, here's how much it's listed for. Or if anybody ever leaves you a property and then you have to sell the property, but you capitalized it, something like that could get disclosed. And so they just want to disclose things that are capitalized as a capital asset that you're holding for sale at year. So audit implication is for next year, we will ask if you have any assets held for sale, and then we just have to disclose that. So nothing too crazy on the implementation side. 103 is kind of tedious on the drafting side, but it's easy for you. It's just a couple of questions. And then statement 105 would be for 2027. That just adds a couple sentences if you have a subsequent event. So if you were to issue debt after year end, before we presented the financial statements, it would have an extra couple of disclosures, making sure you have all the details surrounding the debt. It's just kind of clarifying exactly what you have to disclose for that. So it's a little less optional. Any questions on those? All right. So that kind of concludes our normal audit presentation of these year's financials, but something I kind of worked through this year just to provide an additional option for the city to consider. And I have an example of a report of another city, because what I noticed is as I was kind of doing these reports, it was a very long report for a city this size. The audit is very time consuming, it is costly. And there are a lot of cities your size that don't get the full financial statement you are currently getting. The reason you have that is because your PFA loan used to probably require it. Now that it's smaller, it doesn't require that you have a full accrual audit. I know that Christina worked with me to also confirm that the USDA loans wouldn't require you to have full accrual statements or the modified accrual that you have today. So maybe if you can look at if I can find. Well, you saw if you look at the balance sheet on those financials, maybe I'll take back on me.
The big one, right?
Yeah, 25. Like third. Yeah. If you look at page. There we go. Go to page 15. All right. Got that?
Yep.
Sorry, I just so this your current statements are on a modified accrual basis. If you look at this 15 where it shows general golf revolving loan fund, right? You have cash, accounts receivable, advances, notes receivable, property taxes. And in the liabilities, you have accounts payable, accrued salaries, and you have deferred inflows for unavailable revenue. It's a tax concept. So you have a lot of detail here. And if when you're looking at these statements each year, you find it helpful to have that level of detail, and when you're looking at things monthly, you want that, then these perhaps are the best report you might want, and maybe you do want to continue reporting on the same method you have been. Here's another city. This is the city of Hill City. And so this is the cash basis reporting that you have the option to do if you wanted to. This only has cash as an asset. And then you basically just have fund balance, which equals cash. So you'd still have your restrictions, so you can see reserves, but you don't have any receivables, you don't have any liabilities. The accounting becomes more basic in the system. So if you're using that for anything you find helpful for decision making, maybe also you wouldn't want that. But this, of course, would take far less time, effort, and money on the city side for whether it's the audit and that sort of thing. And a lot of cities the size opt for that if they legally can. The one caveat to that is if you scroll down a couple pages, Christina, where you have here. So enterprise funds, the one difference there is, do you see how the water is an accrual fund? That means you have one enterprise fund, and for you, it wouldn't be your water fund, it'd be your liquor fund. The state of Minnesota, if you have a robust liquor fund like you guys have, you have to have a full accrual. So you would have one fund that would have to remain full accrual. That would include your liabilities, your comp abs, your OPEB. So some of those calculations would still have to happen, but only for like 2-3 employees or portions. So it doesn't eliminate all of the work, but it would eliminate a good portion of it. So I sent that to Christina to share with all of you. I just wanted to present that as an option. And I don't know if that would be something you'd want to switch to. I'm not really providing you a recommendation. I just wanted to see if it was an option because previously it hadn't been for the city. Because your USDA loan and your PFA loan would have required full accrual statements. And now that you're done spending that down and the PFA loan is small enough, you have the option to switch to that if you'd like to. So I just wanted to bring an example to show to you, and then it'd be up to you as the city council management to decide if that serves your purposes from a financial reporting perspective. And if it doesn't, then I wouldn't do it. But it is a potential cost savings and time savings if when you look here, if you look at this and you find, hey, I don't know that we're utilizing all of this, potentially a good option. It just depends on to what level you're utilizing the information, if you need it as detailed as you have it.
How much are we saving?
Knew that was gonna be the question. Didn't I tell you that?
Yeah, if you were.
Let's cut to the chase here.
Right. So I took a look at a cash basis cities, even the small ones that need significant help with the accrual basis. I mean, sometimes that'd be about half what you guys are at for this year. So you'd probably be looking at tens of thousands probably. There's just, I mean, if you look at the difference, right? Your cash, we got at beginning cash, ending cash, and then we would look at receipts and expenses for 80% of your activity. And so that's us doing some variance testing for revenues, but it cuts out a chunk of your liabilities. You'll still have the pension disclosures because you'll have that applied to the liquor fund if you have any pension employees in there. So some of the liabilities, if the liquor fund benefits from them, we still have to calculate and do, but it does simplify because you're not allocating anything. You're just doing it for those. And so that gets a little weirder because you have one fund that's full accrual, the rest are cash basis. So it is something that you can do and switch to. I think from this process perspective, it would have a significant savings in time and kind of funds in general. But again, if the financials you currently get, if you look at those, you're like, this is what I want them to look like, this is the level of detail, maybe that doesn't make sense for your community, it just depends. But I do think a lot of smaller cities that have that option have been opting towards that, because in the last 3 or 4 years, between the lease standard, subscriptions, the OPEB, they've added like 5 audit sections in the last 5 years. So it continues to increase in complexity. Now, the upcoming 3 are not too bad, but it doesn't change that there's still more things for Christina and your folks to prep. So hopefully a helpful option for you to consider.
Christina, do you have a preference? Are we using all this information to the best of its?
It's all I've ever known for the 13 years I've been with the city, so to change it, to me, yes, a cost savings to the city is, you know, what I'm put in this chair to do. But on a tracking process for it, it would be a huge jump, a huge drop off from all the history that we've already done. So I'm kind of like battling back and forth with the ability to make a major change, because it would be also a big practice in the standards that we're doing in this office too.
And one example would be, think you're like water and sewer funds that would go to cash basis. Right now, it's really important you track what everybody owes in the system as like a receivable at all times, right?
Yeah.
So you know whatever.
Yes.
You'd still potentially need that information somewhere, right? For the
Yeah.
billing, but it wouldn't be in your financial statements. And so that's an example of where you may be doing something for this, where it wouldn't maybe change the internal process other than how you book it into the general ledger. So there likely would be a lift switching to it, but this is way easier from a reporting standpoint. So there is, there's not no work if you switch. It's certainly going to be something Christina and I would probably have to work on, and you'd probably want to do it. I did look, I have seen a couple communities do it throughout a year, but it also could be we do the normal one more year and you switch over in January, so you don't have a year with both. But ultimately from
I don't know how you do that. It wouldn't be a complete.
It will be tricky, it'll depending on how, I mean, we start and stops things so quickly from year end to the next year that.
Right.
Yeah, you can switch to cash basis at any point because it's when it's getting easier. Now, I will bring one other reason where that might be less attractive. If you were to go for another PFA loan and you were to put that into your water fund or any other fund, they would likely require modified accrual statements.
Correct.
So think through, and same thing with the USDA item, right? So if you're planning to do some of that federal funding or some of those loans. It's not saying you wouldn't do it, it's just in that year that would then trigger the requirement for it potentially. Now, if you're not doing huge amounts, but then of course it's less helpful to the community, sometimes like the PFA will like waive that stuff if you request it. So that is something to consider. It's the reason you have it like this is because they were requiring it. So if you were to go back and get funding like that again, it's possible they would say, hey, we want the full accrual. Switching from modified and full accrual to cash basis, not that bad. Switching back, pretty awful.
Yeah.
Genuinely awful, because all these liabilities and assets you get rid of. Then no, yeah, so that's probably the thing you want to give the most thought to. Is if you ever were required to switch back, it's really tough because then you have assets and liabilities that didn't exist last year that need a beginning balance. And you essentially get 2 audits in 1 year because you have to test all the balances to start and all of them to finish. But right, you have kind of it is also possible for the PFA, they might just switch the water fund to full accrual, right? So they might have to do it. So
I'm sort of liking the idea of saving money, but at the same time, I like the idea of having the information.
And that is hard too, because on the expense level, the way that we've run in all the budgets throughout the city is we really have a good understanding of, you know, we're tracking electricity every year, we're tracking heating, we're tracking specific things all the way down to postage and all that kind of stuff to try to figure out where we can save what's the best cost savings for the city or what's the most efficient thing we're using the money for. And without that data, then you're kind of shooting in the dark, right?
Yep.
So I am a big proponent of leaving it better than the way I found it. I would not want to do that to the city and then have to double back again if we had in 3 to 5 years the potential to getting
So you're saying you're
funding.
leaving?
Nope, I'm just telling you my thoughts. Yeah, I mean, if we look back 2 years prior to CLA taking over our audit, our previous auditors were doing a lot of work without charging us, and we've discovered that in 24. But we're in a better position now, knowing what we have been doing because CLA has been bringing a lot of stuff.
To our
Light.
attention, yeah.
Right, and without their involvement, there would be a lot of things that we wouldn't be reporting correctly still.
And we did from last year to this year, the average decrease in time into a job from the first year to the second for us is about 20%. And this one changed about 35%. So this one has gone a lot smoother.
Even with the hiccup in the middle there, kind of with.
Oh, yeah, even with the hiccup, yeah, so that would have gone even smoother, and that I'm not
And that was
including
just
that.
the thing audit
Yeah,
stuff,
right.
yeah.
So, yeah, that includes that, so. And I would say Christina's diligent enough that if you guys do stick with this, like she's genuinely fixing and working on processes, so it'll continually to get better. I'm pretty positive she's, like the amount of things we ran into this year are probably less than half, so like some of them sound like the same, but there's a lot of things we didn't encounter that we saw the first year. And last year we had some prior period adjustments because the previous statements were misstated and we didn't have any of that this year. So, yeah, so I'm not coming here to push either one. I just wanted to make sure as a community you had that option because I don't think it's something a lot of firms bring to their clients as an opportunity. I'll make less money if you guys switch to that, right? Because a lot of firms don't point that stuff out. I think it's important that you do what's best for your community.
There's that too.
Yeah.
So no, I just want to make sure that you guys know your options.
Okay. Timeline wise, when do we want to do we want to make a decision on this on the, like?
For sure before the end of the calendar year.
I would say by the end of Q3
That'd be fun.
would be
So
a
that
big
we're
deal
not,
because Q4 is when I start really thinking about year end.
okay, because I wouldn't want to try to do the two different audits in 1 year.
No.
No.
I'd like to use some of
No.
vacation time.
No, we should, if you switch to cash basis, if you chose to go that route, I'll work with Christina so that your internal stuff works for that. It's really the other things that you track that are getting reflected here that maybe you still want to track, maybe you don't, that
Yeah.
decision is the piece that takes the time.
Yeah.
Because of course, you still have to track who owes what for your utilities, but you have to track what your accounts, do you need to know what your notes receivable balance is for your revolving loan? Yes, right, you're still gonna have to track that,
Yeah.
not gonna be reflected here. So some of this will still get tracked, easier to audit, easier to report. But if you're tracking it all anyways, would you prefer to see it in the report?
That, and I also really like the idea of everything being tracked like this, and there's no chance of something, fraud is a big word in our, this is all open and out in the open. It's very,
I think this board appreciates the transparency that
Yeah.
we put out to the city as much as possible. The income statements we put in the consent agenda, the fund balances every month. I mean, despite, this is a lot of data to have to digest, and a lot of board members probably would not be able to digest it all and understand it either. But without that history, you also put the city in an issue where 5-10 years down the line where somebody's gonna really want this, like if it's PFA. And without it, then
You don't have it.
you gotta start all over again.
And if you do have, and if God forbid Christine ever did move on, which you should. And you had, and it was cash basis. And if you had it as cash basis, when you bring in somebody as a city administrator to do it at cash basis, if you do ever have to switch back then. Extra bad, because then they don't know how to do it.
Yeah,
So it doesn't come without risk. There is a potential savings of time and cost there. It's just a reporting option that has become available to you this year. After we checked with PFA and the USDA, so I wanted to make sure you were aware that that's a decision.
appreciate it.
Any questions on the audit or that presentation?
Counselors?
No.
I have none, Troy.
Thank you for your time.
I have to ask your curiosity question. Where are you folks officed at?
So Siona and I are officed out of Minneapolis. We do have offices in like Brainerd, Alexandria. We have Northern Minnesota offices. They just have a harder time finding staff that live up here that want to do accounting. I guess they're all fishing. I don't know. But that has been hard. So we see a lot of turnover in our Northern Minnesota offices. If at some point they are able to turn that around, it's possible we would probably rotate some of the staff to be from the more northern Minnesota. Because then they're not traveling as far, they can be more familiar with the area of the city, some of that stuff. But your service out of Minneapolis office now, because we have the capacity and want to do work at this time.
Well, thanks for traveling way up here.
Our northern Minnesota offices did not, they were like, oh, we can't do another audit, right? And that's what you're seeing with the other firms up here too. So. Yeah, no, happy, thank you so much for having us and letting us serve you as a community. We like working with the city, and we want to make sure that we're providing you with beneficial reports and presentations. So if you ever look through this later and you're thinking, or like kind of like the liquor transfer item that we added, if there's something that you think would be helpful to go over and see a trend analysis on, I could create it quick for you, but we could also bring it next year's presentation too. Just keep that in mind. We want to provide you with what you find helpful. And if there's something in there, you're like, wow, I don't want to see that at all. You can tell us that if it's, as long as it's not
Like mandatory?
right, as long as it's not mandatory stuff. Yeah, the audit and the findings you gotta have.
I don't want to see that at all.
there's always gotta be something in
Right.
there.
Yeah, so if there's a graph or something you don't find helpful, just let us.
I'm big on graphs.
So are we, as
I like graphs.
Thank you, guys.
Thank you.
Thanks so much for having us.
Oh, thanks. Very neat.
I'm sure it'll get better. What I do it happen.
Thank you.
Thank you so much.
Bye, have a good night.
Safe travels.
Thank you.
Don, can you hear us okay?
I can. Can you hear me?
Yeah.
Hey, Sean.
Okay. Hi there. How are you all this evening?
Good.
Very good. So Christina, you just want me to take it away?
Yeah, it's up.
Dive in.
Yeah, I think Max is giving you the headway here. Go ahead.
Sure, yeah. So Sean Moran, I work with HRDC in Bemidji, and the city of Blackduck has a contract for our staff person, being me, to review loan requests if you have a application through one of your city loan programs. And so you have an application from Mary and Gary Hauer, who own the Anderson Fabrics Quilt Shop in Blackduck there. And
Larson, not Howard.
Not Howard.
oh, excuse me. Years
Not
ago, years ago, I worked with Mary Hauer when I was at a different organization, and so that's what came out. So yes, Mary and Gary Larson, excuse me.
And they're here tonight, so don't screw it up again.
Oh, are they? Are they? um. Anyhow,
I thought you're now pay the loan.
yeah, yeah.
Well, they don't exist.
The
Give the money to somebody else, Gary.
sure, yeah.
This will be coming up at the next HRDC meeting.
Yep, that's fine. That's fine.
Sorry, Gary. It's
so-
done.
Yeah. So you have the commercial rehabilitation or storefront renovation program. And so that's what the Larsons are applying through. And I did a review of their loan request. I did underwriting. And then I presented it to the city's loan committee. And we actually met about the request a couple different times. And ultimately, your loan committee is suggesting that the city council approve the loan request. And so I wrote to you a memo that's in your packet that kind of details the terms that would be part of the approved loan if the city council approves it. And so I'm just here to answer any questions. I don't have a whole lot more in terms of a presentation other than that. But I'm here to answer questions and talk about anything that you would like me to talk about.
Questions for Sean?
I don't have, no, my question is specifically for you, Sean, but maybe
Yep.
for Eric and Gary, but, could you just give us a little detail on the uses? I see here it says replace, repair roof, other exterior upgrades and repairs. You just kind of hit a few highlights of what you're planning.
Yeah, the most of the roof is shot over there. We're planning on fixing the roof. We got a small addition going on right now. We had moved power, as you know, we had moved yours too.
Yep.
Moved the air conditioning.
Anything regarding specifically about the facade, like the storefront or anything like that?
We put new metal on the alley wall.
Yeah, I saw that.
We fixed all the damage from tearing the building down in the back.
And the sign.
That's fine. Yeah.
Yeah, we fixed the sign.
This is fine.
So far. Well, I just want to say that, in my opinion, we should follow the advice of the revolving loan fund committee. But I also want to make sure that everyone understands that this is a Blackduck couple. They have invested in Blackduck. I think Blackduck needs to invest in them.
Yeah, I read the minutes of the revolving loan fund. They were strongly in favor of it. This building, which we are putting up against here, has been there since I think prior to 1910.
Yeah.
So, yeah.
Does your paperwork show the year of construction?
I've never seen anything
No.
definitive, no.
Yeah, but there's pictures that I'm sure of 1910, that in this intersection out here, a lot of Model Ts in the early part of here.
Yeah.
Is in that picture, and it served a lot of uses. This town had a vibrant.
She had a customer in a couple weeks ago, it was great.
His grandfather, somebody,
Owned the grocery store here.
yeah, they ran the mercantile there when it
Yeah.
was the mercantile. It was, yeah.
When this town had a vibrant business district, I was a kid, it was the IGA grocery store, run by Herb Swanson, then the Boons followed him. Prior to that, it was a Red Owl for affiliated store, according to pictures and signage. For, 30s, 40s, It's always a mercantile grocery and a lot of stuff in there, so I'm happy to see a vintage building is being reused, even though it's been kind of changed by that hideous blue sheet metal awning thing that covers up the windows. You got that off of there and you could rent that apartment upstairs and make some money.
We're trying to get into that apartment upstairs.
That's been blocked off since the seventies.
Oh, really? You can't physically access it?
No,
Oh, wow.
we're getting in there before we.
Yeah, so I think if there's at least one apartment.
Interesting, at least, yeah.
That's where they are.
Hopefully the tenants are still there.
No,
That is.
Banging
is. That's what that banging.
so, but there must be, anyway, you could at least use it for storage.
All right, well. Anybody else got any other questions or?
Any couple who sat through the financial presentation deserves to be this blown.
Oh, I bet they found that very interesting. Yes.
That was a heck of an endurance test. So just based on that, I'm convinced they're gonna be successful in this business. They can endure that and endure any ups and downs.
All right, then with that,
I would accept the motion. I will move, we approve the revolving loan committee recommendation for Mary Larson, Larson Creations, DBA Fabrics Quilt Shop, one request in the amount of $40,000 as outlined in the memo attached to the agenda.
Second. Nick, sorry, that's why.
I have a memo or.
You're up.
Motion and a second. Yeah. Not a word.
Boy, that's right. Let him have it.
Yeah. A motion and a second. Is there any further discussion on this? Then I'll call for the vote. All those in favor? Aye. Opposed? Hearing none, motion carries.
Thank you.
Thank
Thank
you.
you.
I think this is the first time I've ever seen the revolving loan.
Yeah, the last loan we did was Flowers in the Attic, and that was just prior to you being.
Is that the term of that loan still?
It is, yes. It's almost done.
Very good. Thank you all. So then the Larsons can expect me to write the offer letter for the loan on behalf of the city, and we'll work on the closing.
Perfect.
Thank you, John.
Thanks, John.
You're welcome. Yeah. Have a good evening. Catch you later.
And with that, we can move on. I don't think there's anybody here for the Blackduck Forum.
No, we're in it now.
And
Are you sure?
nobody here for the Blackduck Forum? Okay, then, Christina, seeing none, we will move to reports of committees and staff. And that would be Mr. Mike Schwanke, who is unable to be with us this evening.
Yeah, I'm hoping he will be here next Monday for the work session, but he is not. Yeah,
Yeah,
he's just not here. Let's just say it that way.
Yeah.
It's a first, but yeah, Mike is at home recovering, so. But Joe and I have talked a little bit. We'll have more for the council to discuss the trunk highway project at the work session, and the lift station project.
no, the
Couple of,
highway, that's the one we're doing, that's 28.
yeah, that's 2028. So we've got some stuff to report on the trunk highway project and the lift station project as well. We should have more to report on at the work session. We really don't have anything for the council to approve tonight. As promised from the last meeting, I did provide to you
Yes.
a schedule from Ellers that includes some buy down of the debt. I'm still gonna have Troy Gaylor look at my numbers of what I crunched, but based upon what I saw from reserves for sewer replacement, on the percentage or having 5 months of expenses set aside, I think we could use safely about 150 grand of our reserves on the debt issuance for, the debt issued. So you can see that if we're issuing, 1.6 or almost 1,065,000 for the project, you drop it, you're not bonding for as much, so your principal payments drop down quite a bit. You still have a really big balloon principal at the 20-year mark is what I gave you guys the 20-year schedule to look at. I think on the previous schedules I gave you guys, the big balloon at the end was like $75,000 principal. So we're still talking somewhere, around $20,000 to $26,000 that we'd still be levying for this project. Just
Repeat that.
20 to 25,000 that we'd still be probably levying for this project every year. Just in the first couple of years, and that, yeah, I know the project needs to get done. I'm still just a little on the fence about how much we really want to levy for it and what the sewer fund can do. So 150 grand is a decent amount of money, but when you put it on a project this size, it really doesn't make a drip much. But as promised, I looked. So, when the project, like I said, the last meeting, when the project was $385,000, it was fine. But now we're doing something that is bigger than us that we originally walked into, but it's also greater than what we walked into for very good reasons. And I think that's the end result that the city has to think about as we keep it moving forward.
It's a must have. It's not something that we can, I mean, if we can do this project and we do it once and we do it right, instead of coming back.
Yeah, and not to foreshadow the work session, but I think when you guys,
Yeah, I know.
when Mike can be here and we can actually bring to you our full thought process since last meeting, you probably get an understanding of why. We originally thought we'd have plans for you guys to approve tonight, but I don't think we're ready for that yet. I think we need to put just a little bit more time and effort into the planning of this.
Yeah.
To not just make it like, let's just fix the carburetor, let's fix the whole engine kind of thing. So I just wanted you guys to be able to digest that. Okay.
Fair enough.
Before the 17th. I really can't make a report for Mike's department.
Well, grass is still getting cut.
The grass is still getting cut.
Park looks nice. I was out at the cemetery for the flag burning. It looked nice.
Yeah.
Things are still going. I'll have to give them a call. Liquor store,
Yeah.
Shonda, not present. Melissa,
Yeah.
what would you like to report?
Everything's going good. Our third air conditioner's in, up and running, so everything's starting to cool off now that we don't need it, but hey, it's there, it's going. It hasn't been 90 degrees, but it is in.
Was there a transition period when it was out of service being replaced, so they got really hot in there, or?
Don't know, we've been dealing with that for months. So yeah, no,
So it's in.
it is
Done,
in, it
working.
is running, it's doing great. Obviously, it's helping to combat the off sale side too.
Saw the bill from Clarity.
Yes. They came in and had to refix the door again, but we're hoping that with the new air conditioner, that will help alleviate some of that extra moisture.
Yeah, could you just detail what specifically was fixed this time with
With what?
the door?
The same as it was last time.
Which
They,
because their invoice was not detailed at all.
they had to, this, you know, the door slides. All the components are above it.
Mhm.
So there's a track up there that the door slides on, that's behind that panel. Well, when you get that much moisture, it gets inside that track. And then enough moisture after time and opening and closing, it starts to break down the motors in there and slips the belts. So they came up, they fixed all that. And he actually drilled and put 2 vents in the frame on that door or on that panel.
Mhm.
So now it'll have airflow in it as well, so it's not gonna just trap the moisture in there. Now you can actually, with our dehumidifier going, it can actually pull more moisture out. And allow the motors to stay cool and not get hot. And can hold the moisture in there. So that's what all that was, that they were just resetting the track on the top and fixing the motor.
Anybody house breakfast,
It's a hit or miss. Some weekends are decent, some are not. You know, sometimes Saturdays are a little better than Sundays. Sometimes Sundays are better than Saturdays. We just got some new table top flares to put on the tables to get everybody to the more promotion.
it's an option.
Yep, yep. Obviously it's still on the big sign. I think we do have it on the radio station, I think. With 1200, with them down there. So it's just kind of now we're just still word of mouth. Shonda and I decided that we're gonna kind of see maybe it through till the end of the year. Maybe revamp it a little bit, just make it a little more simpler or something, you know, take something off, bring something in, you know, maybe change it up something.
Can you guys get us a graph? As to how much, what's the breakdown? For the breakfast?
Sure.
You know, like how much are we?
Yeah.
What are we making, what are we spending?
Sure, we can do that.
How's wood carvers?
It was good. We had a very good wood carvers this year. We had a very good summer as far as sales and whatnot, so we had a really, really good July. So a lot of people out moving around and so. But no, yes, business has been doing good. Obviously we're selling food.
I say it with all that, but as hot as it's been, I'm surprised the beer sales system fly right through the world.
Off sale was pretty productive,
Pretty good.
but you know, when it's 90 outside and you're 75 in the bar, not a whole lot of people stick around for a whole long time. Come in, get something to eat, have a couple drinks, and then they're gone. And then the next crew comes in. So I do feel that without that second air conditioner in the bar may have kind of.
Was there an
What?
uptick for like the Kilby Barn Fest that went on?
Yes. Our numbers were up from last year, probably by about, what did we figure?
I know for the last couple of years, it's gonna be the last year, but I don't know when the last year is actually gonna be the last year.
Supposedly this year, but I don't know, but no, between the Kilby Barn Fest and Wood Carvers in July.
Okay, I know you guys had a tent over there, everybody.
Yeah, we did really well at the park this year with that, so. A little better than last year, I don't know, just a little more promotion on it or advertising on it maybe. And then have a booth, obviously, a tent at the bash this weekend.
This weekend.
And the band will be at the bar this year, again.
Who's playing?
Showroom?
Okay.
Don't quote me on it, but I believe that's who it is. Other than that, I don't think I have anything else.
A good customer experience. Bar, in the offset last Wednesday,
Oh, sure.
very good customer oriented.
Yes. Yes.
Very familiar with the discount that's offered on Wednesday. Very,
Get that in there.
great with the customer.
Get that in there. Huh?
Yes, she is.
And if your employees don't work on Wednesday, I don't know who they are. They are Wednesdays.
Great, Ron. We'll make sure we get everybody filtered in there on Wednesday.
I always get the receipt, so I know the name, so I can count them.
Well, we appreciate the compliments. Thank you. Thank you.
Anything else for the bar? Okay. Yes, on fire.
The annual budget meeting is this Thursday night at 6 o'clock. Next, you'll be there, I'm assuming. This is the packet. I have some additional incidents for the incident log that will show up that night. I think they're down to, or up to 44 runs now for the year. I guess the biggest highlight, they've got some budgeting things that Brian's trying to like hold to, but right now it's under budget from 26 going into 27. Still trying to order some more turnout gear. But I'm gonna report after the finance committee meeting this week, after the work session, I'll have some more comments for you guys about potential surplus from this, from 25 that we can use it to 27.
Good. Library. Unless someone has a golf course. Excuse me.
Yeah.
Unless someone has something else for the fire. Insurance. Golf course.
So the workstation that is in the clubhouse has, when it was originally purchased 4 years ago now, it was a basic model. It was used for only the point of sale system, which it works fine, but that system is being used more for, you know, Misty's marketing and other stuff. And a couple weeks ago, the system almost crashed on her.
Is that got the club caddy on
It's
it?
got that, it's got the point of sale system. The Club Caddy is a point of sale system on it, plus everything else that she uses with it. So it almost crashed on her. It basically was out of memory. She had a lot of downloads that needed to get cleaned out of it. And it has some basic software in it, but it doesn't have a whole lot of software. She doesn't have any Microsoft products on it. But anyway, the unit itself, its hard drive was not large enough to handle what it's being used for now, not its intention originally. So we're recommending to replace it as soon as possible. I had the county provide us a quote, more suitable. They're the ones that actually cleaned up the existing one to keep it running. I originally thought that we could put this off until the end of the season, only because I'm worried about a transition period for the department, but like to get the council's approval to move forward with this so that it can at least get ordered, because by the time I think it'll come in and get installed will be past Labor Day. And that will be a slower time for this to happen anyway, but I don't want that system to crash. Luckily, Club Caddy is a clouded based point of sale system. So we can retrieve anything we do have if the system goes down. But if the system goes down, they're in trouble. We even had a hiccup with her credit card system the week prior to this, but we got that back and running. And it's unrelated to the workstation that's being used for right now. So I'm looking for the council to approve this purchase, because we did not budget for it for this year. But her department is doing really good this year. The income statement's looking really nice. So I think it can be worked into the existing budget.
Yeah.
I'll move to approve the computer purchase for the golf course for $1325.91.
Second.
Motion and a second. Is there any discussion on? All those in favor? Aye. Opposed? None, motion carries. Gotta have it.
Unfortunately, yeah.
It's a,
Heavily discounted too.
We get really good deals from the county. We
Yeah.
do.
I was gonna
It's
say
nice to have their partnership with. So,
library.
did receive a quote from DK Builders, for residing the library. This does not include soffit or fascia. This is just siding. Trim. Yep, this would be for that, it's that cement board siding, so it's not, won't be vinyl. If I understand that right. No, it does say pro panel vertical exposed fastener steel. So
Yeah,
it's-
it sounds
yeah,
like
it is vinyl, but it's a little bit better quality than what we have right now, and I think that existing siding that's on there's probably at its use. I know it's over 20. Probably over 20 years old by now.
I believe.
Yeah, and some of it suffered quite a bit of damage at the ground level. So since we can work this into the project with the local option sales tax, I strongly recommend that we just go with DK. They're a local business owner. And this is actually a lot less than I anticipated it was gonna be. I figured we'd be shooting at like 45 grand. That's pretty cheap. So I can't sneeze at this at all. And Nicole and her,
Second date.
yeah, exactly.
Let's do it.
Okay.
And to clarify, it is vertical steel. Vertical exposed fastener steel, so it's a corrugated type of vertical siding, similar to what you put on the
Yeah,
side.
that's same stuff we put up.
Yeah.
I think it'll still look better than what we thought.
Covering up the outside of the brick, so.
Well, I'll move to approve the siding quote for the library.
Second.
We have a motion and a second. Is there any discussion?
And just to clarify, we still feel this is all within budget, Christina, right?
Yeah, I did provide you
It's on the-
a budget on the second page, and we did, the only thing I still have outstanding to pay is the patio and landscaping. And I still haven't submitted for Q3's reimbursement to the grant, which I can still do for, I got it. There's two other things on there, the gutters and the sign, I think I can still submit for.
Sign looks nice.
Does look good.
Yeah,
Yeah, but just for the record, I want to state that we're under budget with the monies we have coming in.
Yep.
Sales tax, that's it.
Then, any further discussion? All those in favor? Aye. Opposed? Hearing none. Motion carries. Christina, we're finally to you.
and I will defer to Emily. That easy, just me. Really good at passing the luck.
We submitted a donation request, we have program expense fees, those are, what we've budgeted, those are for. The fun stuff that kids actually like use and play with, there are a lot of expenses, of course, with running the club, and so we're asking for, an assist on the program expenses. And then for staff, our staff wear t-shirts for uniforms, we have a few now that say, Boys and Girls Club of the Bemidji Area Blackduck branch, but we want to make sure that we have enough of those for all of our staff, which hopefully, unrelated, but by the way, we are really looking for additional staff. We need some more youth development professionals, so So we've submitted a donation request that would go to those two pieces. And that is aligned with the budget that we have, so this is not necessarily, so, and this is for the school year is what we're thinking about, and so it is not something that we have not already spent the money. I am asking for it, so we can't spend it.
So you're asking for a total of 1,800.
Yes. That is half of the budget expenses, or the program expenses, the Boys and Girls Club was used it from the other.
And for the board members, I started adding donations to date on the income statement for the liquor store. So you guys could at least see that little breakout. I know Ron had asked for it as well. It just makes it easier for me to do it at the same time I do the income statements, but adding it to each individual donation request. Every time.
Yeah, I want to thank you for doing that.
Yeah.
So it used to be a separate report. I wanted to break off.
That's just easier.
But I was surprised. I'm glad they did it. I see we've already exceeded our budget for this year.
Oh, yeah.
Which is based on what we did last. So.
Well,
A new request would be
we did not.
problematic.
We did not donate to Tri Sigma or Wood Carvers or Youth Bowling in 2025.
Right.
Those are all new.
And we have additional repeat requests coming in, I think. So
You will have one, it's been postponed to September 8th from, for, the Madam McKee Foundation.
Yep, as well as for holiday requests.
Potentially.
Oh, yeah.
Actually, I don't really know if that's true.
But
Because
Toys
Toys for
Kids,
Kids went to United Way and the, Decorate down at Whiteside Boys and Girls Club basically donated for.
they're the ones we were
So
doing.
they didn't ask for any funding for that, so this might be the this and Madam McKee might be the last one.
So just to repeat that, the Toys for Kids went to the
United Way took up, the Minji took over.
So they're no longer doing it.
That's first. Yep, yep. It is important to note, if you're looking at the, liquor income report, or the liquor income statement, sorry, where I have the donations broken out on that actual page, just below that is the rent income year to date is at $12,133. So the fund itself is at about $35,000. 15 of that we have earmarked for the liquor store to keep for operating, but they've taken in 12 grand in rent just this year, which is about 6,000 more than last year at this point. So were we modest with the budget?
Yes.
We were, because we didn't really know what we were gonna do, but you guys took on ETABs as well, which is we did not have in 2025.
Correct.
Yeah. So there's more rent coming in because there's more tabs being sold.
And the uses for that money aren't they, isn't that restricted?
The uses of the money can only go out to, obviously nonprofits and other organizations in town that actually only service the city and the community. So, and historically, it's been community and kid-based.
Like what's on a mission statement.
But doesn't any excess revert to the general fund or city funds?
The liquor rent fund is its own fund. It stays under 609, which is the liquor fund. So when it's reported to the state auditor, it's reported as revenue for the liquor store.
But you can't take
You can't take
rent
city.
fund and go and pay off use it to pay city bills like the
No,
gas bill in Napa or
Right.
diesel. Right,
it can remain in the 609 fund though.
correct.
I know it's going over our budget thing, and I think it would be for a great cause for the Boys and Girls Club. To do so. So I would motion to approve the 1,800. Album point adjustment.
Second.
Motion and a second. Further discussion.
Do we have an indication as to future requests for donations?
The only one that I have,
I'm talking about now from the boys.
From the Boys and
oh,
Girls.
I'm sorry, Ron. I apologize.
We would love to have, to know that there's continued support for the city. We're looking at, presentations to townships. We do fundraisers as well, so we'll do a fundraiser here, we'll do a Blackduck golf scramble. We'll do the Blackduck Bonanza and then the boys, and then the gala, which does happen in Bemidji, but it is an organizational fundraiser that happens in February. So we do our own fundraising side of things, but absolutely our most sustainable fundraising is and support comes locally. And so it would be really magical if we could get to a place where we could say we can always count on the city for this much per year. Right? It's budgeting, right? It's how we know that we can stay in this community, which is when I think about the history of us coming to Blackduck, like what I want is to make sure that we're here, because it sounds like there's been a lot of one-offs, and we don't want to, we talk about being here for generations of kids. We don't want to be here for 3 years and then go. And so
How long did it take to get Boys and Girls Club here?
Around 3 to 4 years, so it's.
It was,
I mean, minus that we've been in Bemidji for 20, so like,
Right.
it's like,
it took a while for them to. go here.
yeah.
And last year you guys did a presentation for us, wanting us to commit a larger amount, and we kind of said that we would do something little every year. If I remember right, last year,
I think you're right.
we did say that.
So I think in like, this was like, let's start somewhere and let's figure this out. But I'd love to talk about what might be another way that we can think about this, that is something that we can budget for, that you can budget for, that it's just a standard, and we can figure out what that magical amount is, that maybe not 10,000, but maybe helps when it costs a minimum of like $10,000 a month to run a club, right? Summer is more expensive because there's a lot more service hours, but during the school year with a full day Monday program, it's not a cheap venture, but we're not there because it's cheap, right? So for the rest of this year, no, I am not planning on making any more asks. That's what you're getting at. That's what you're getting at. For the rest of this year, I'm not planning on making
How
any
many more
asks.
meetings are we gonna see your lovely face?
Well, as many as you want, Ron, but. But no, for asking for a donation. For this time, no, this is what I'm asking for right now, and I'd love to figure out how do we keep moving forward, but this was the answer for right now.
It all depends on how well the liquor store does for us, because that's where our.
I'll try.
I'll buy this. I'm working on it.
And a key point that I heard you mention is you're working on township presentations.
Yeah.
Because you're coming to governmental entities within your service area.
Right.
We are just one. The footprint of Blackduck is a very small footprint, and I would expect that probably the majority of your clients reside outside the city.
Yeah.
Blackduck, a lot of, probably within a 15-mile radius.
That is one we not enough, but like sometimes I talk too much. But that is one that like when we look at our membership application, you know, we try to make it easy on the program staff because they have 1,000 other things that they're doing, and working with kids should be the #1 thing. So I don't try to put a lot of stuff on their application, and they try to use the same application for Bemidji and Blackduck. But we don't ask like, what township do you live in? And so trying to figure out how do we on the backside then go, because I'd really like to be able to say like, this many kids live in Hines, this many kids live in Hines, right? And that's not something that we have right now. And so we're gonna work on trying to figure that out a little bit better. Because I think that would help a lot, is knowing, okay, if there's 57 kids registered this summer, there's 25 applications in for the school year. What are those exact townships?
Yep,
So,
I would think you would want to solicit those governmental agencies or entities as well.
yep,
And the benefits are great. My granddaughter has attended, and been a part of it, and it has helped her tremendously grow.
And she is a resident of the city of Blackduck.
She is,
Okay, there you
she is. I think her face is on a van.
her face is on a van.
That was a shock.
Signed that waiver, right?
I did, but no, I didn't envision van. I had the brochure and the letter, and I was like, oh, this is fine. And then one day, there she was. Street of it, so. And she didn't know either, so it was pretty funny.
She was very
We got to, yeah.
So
And she got to speak at the gala, and it is, you know, it's a great opportunity for kids to grow in a positive way. And have a place to be around positivity.
I have never had more fun losing money at the Blackduck Bonanza than I did. I mean, I bought tickets and tickets and tickets, and there was just not happy. No,
Give a motion?
And I got a second.
we had
We're having further discussion.
We're in further discussion. I'm gonna call for the vote. All in favor? Aye. Opposed? Hearing none, motion carries. Thank you.
Thank you.
I have a revision to resolution 2604, adopted or appointing election judges for the state primary and the general election. Paige obviously got married this year, so I needed to change her name so that was right down at the county, but Eric/Charlie Anderson is now going to be an election judge for us tomorrow as well, so I just need this formally approved. Today is my last day to appoint election judges, so
Motion to.
thank you.
To approve.
It's resolution 2026-04, revision 1.
I'll second that.
I was just gonna say, my question for discussion was, I had no idea who Eric Anderson was until you mentioned Charlie.
Yeah,
And a vague cobweb clearing for
because
45 years
70%
ago.
of the people that live in this area do not go by their first name.
I had a vague recollection.
Do you know how hard it is
45
for me
years
to
ago.
determine the cemetery
Yeah.
records? No one calls themselves what they were given.
Charlie was actually Eric. I was wondering who the heck was Eric?
Yeah, anyway.
Motion in a second, all in favor? Opposed? None. Motion carries.
The other resolution revision I have is 2612. Not too long ago, you approved this resolution appointing me as the role of authorized representative for the deputy registrar. I know Ron had questioned this, and I sent this back to the DPS, and they said, "Oh, you can't be both." And I'm like, "Make up your mind." So there is no one else above me except the mayor. So this document unfortunately states the mayor is going to be the authorized representative and myself as the appointee. And that's a check and balance, one of those things that I think like Troy and Siona had commented on.
Yep.
At this point, it says mayor. So I left it as such because if there is a change of board members, then all I need to do is have the one form signed so that the right person gets emailed from DPS. So can I have this one approved, please?
I'm all in favor of Max having even more duties than he already has.
Lead person.
I will move we approve resolution 2026-12 revision 1, appointing city mayor as deputy registrar.
Thank you.
Second.
Motion a second. Any discussion? I think there would be. All in favor? Aye. Ooh, should I even vote on that?
You know, side note, this part of the department is not easy to, get a hold of. I asked for clarification prior to the original version of this resolution. Never heard from them, knew I needed to get it done, and that's why I did it the way I did in June.
Okay, so
And then they told me it was wrong, so I'm like,
then I'll actually abstain from that one.
You don't need your vote.
Yep, I know.
You can vote against it.
I'll abstain,
okay, duly noted.
just to be sure.
The last thing I need approval on is an update to the fund balance reserve policy, with the audit this year. There's been some updated language classifying the different types of fund balances that we have and their language. So with CLA's recommendations, I have a revision to this. I did not bother you with with all the originals of this. It's it's just the difference of how you call the actual funds, so.
Yeah, what the name of it is.
Yeah,
Yep,
yeah, even I was a little confused when I first looked at it, so.
it's the same. All right,
I will move, we approve the updated City of Blackduck fund balance reserve policy as updated August 10th, 2026.
I'll second that.
motion and a second. Any discussion? All those in favor? Aye. Opposed? Hearing none, the motion carries.
Just a series of dates for you guys. You can absentee ballot through today. 5 o'clock, I think was last time. Tomorrow is the Minnesota State primary. Polls open here at this polling place at 7 o'clock AM and at 8 PM. There's a sample ballot in the window in the vestibule if you want to see it. August 13th, the Blackduck Finance Committee will be meeting to start working on the 27 budget. Also, August 13th at 6 o'clock, the fire protection budget meeting, cities and towns will be held. August 17th, next Monday, we'll have our scheduled August work session. September 8th, the day after Labor Day, will be the September council meeting. And as you noted, I moved with the McKean Foundation's request, their donation request to the September 8th meeting. I left the documents in the packet so you guys could at least see what the request was. And unless you guys have any questions for me, that's all I've got.
I'm not. In my hand,
Good.
this one,
The sooner we adjourn, the sooner I can flip the building over for balloting tomorrow.
would you like a hand with that?
I always use Anna.
Motion to adjourn.
He asked for it, what's up? Well, you've been very patient.
No, I was listening. I talked to Christina quite a bit on the way earlier today. About stuff, and that's where we come up with a whole discussion about the work session.
We'll do it at the next one.
I just want to make sure we didn't drive you or if you wanted to say.
No, there's been enough.
Never dull around here.
I can tell when it's a heavy agenda.
Motion to adjourn, and we got a second, all in favor? Aye.
Are you all in favor?
Yes.
I don't know, if phone distracted me.
We stand adjourned.
Thank you.
Thank you, everybody, for coming. It's nice to know somebody else knows this.